Good afternoon, everyone. I hope you all are doing well. On behalf of NISM, I, Kiranjit Kaur, welcome you all and take this opportunity to introduce today's speaker, Ms. Monica Sachdeva, ma'am, for the webinar, How to Kickstart Your Journey in Securities Market. To a brief, Ms. Monica is an empaneled CPE trainer of NISM, SEBI empaneled Smarts trainer, and also PFRDA empaneled retirement planner. On the academic side, Ms. Monica has done double bachelor's degree in science as well as law and post-graduation in financial administration. This blend has given her a sound knowledge base in all three academic streams science, commerce, and humanities. Further, her corporate work experience of 14 years in leading institutions has given her a rich experience of working in the securities market. Since last 8 years, Ms. Monica has been actively training participants across all age groups and backgrounds on topics pertaining to personal financial management, mutual funds, derivatives, and ethical and corporate measures and standards to be followed while investing. Describing herself, Ms. Monica says that she is a self motivated financial market trainer and investor, and she truly believes in Benjamin Franklin's statement an investment in knowledge pays the best interest. Over to you, Monica, ma'am. Thank you.
Thank you, Kiran, for this welcome, and I really appreciate the efforts NISM has taken to put together this session. So, good afternoon, and to all my participants here today, and we can very well see a very healthy participation of around 170 people in this session. So, on behalf of NISM, I welcome you all to this. Kick-starting your journey in securities market, a session which many of us who want to make our future in the securities market, whether it is as an investor or whether you want to make a stock market as your careers. One bit of a hitch which anybody would be having in his or her mind is when to take that step and whether should I or should I not take this step to step into the securities market. So we'll clear all our apprehensions today. We'll clear all the doubts that a starter would be having to before starting the journey in securities market. So very aptly this session has been named as how to kickstart your journey in securities market. Now before we start the session, I would ask each one of you to think in within yourselves that are you having any of these questions crossing your mind any point in time whenever you are thinking about securities market, whether to be an investor here or whether to have our careers oriented towards any field of securities market. So these are some questions which I feel any starter would be having, whether he or she is a student, whether you are a professional in some other domains, whether you are a housewife, whether you are a retired individual, and even people are so inquisitive about markets these days that even school children are thinking about securities market. So these are some of the questions which are crossing our mind, which I've tried to put together. That first of all, should I have another source of income? And this question is I would say would be crossing across the minds of people who are already following some profession. So should you have a parallel source of income, or should is your profession good enough? And especially we've been thinking about this question very very actively since the last 3 years of pandemic, when we have seen so much of uncertainties happening around us, and so many uncertainties pertaining to our profession itself. So do we really need another source of income, a parallel source of income? The next question after this is, and if yes, I need a source of income, so should I consider stock market? Is it risky? I have heard this about market. I have heard that about, my friends have this opinion. My family has this opinion. My mentor, my teachers have this opinion. So is stock market really risky? And, if it is risky, what are the risks pertaining to this? If they are not risky, then why do people feel scared of the markets? So all sort of question marks pertaining to the risk quotient of this market, it definitely crosses the mind of a person who wants to join it at one point or the other. Then another basic question is that maybe I am not from that financial background or commerce knowledge background. So I'm an art graduate, I'm a science graduate, I'm a school teacher. Am I having sufficient knowledge to start my journey in this markets? Again, a very pertinent question. How much return can I expect? When I've heard that this market is risky, what kind of a return should I expect from here? Is it going to be better than a bank FD that I have, or is it going to be better than my usual post office deposits that I carry? So what kind of expectation should I carry if I am entering this market? If you make your decision answering all these four questions, if you made this decision, then the next best question is, how should I start my journey here? What would be the beginning process? How would be the processing, starting my trading account, or what would be the procedural aspects? What are the documentation requirements that are once when you have made your decision? Then what is the basic amount with which I should start investment? I may be a school student. I have my source of income is only my savings from the pocket money which my parents are giving. Or maybe if I am the breadwinner for my family, I don't have much money left after fulfilling my responsibilities. I am a retired individual, so my limited source of pension that I have takes care of my day to day requirements, and I have very little money left with me. So is it sufficient enough? A housewife would be thinking that I save from my household budget a very bare minimum of amount which I have kept hidden from everybody else in the family for some one fine day requirement, some emergency requirements. So am I, is this amount suitable enough for me to start my journey? So this amount question again is a very big question mark in the mind of starters. The next question pertaining to your money is, what if I need my money back in some kind of emergency situations? How will I exit from the market? How will I liquidate my positions? Will I get stuck, or will I easily be able to get an exit route? So again, a pertinent question comes to your mind. And what if all these are answered, and if I want to learn about the markets, what are the various sources? So if any or all of these questions are there in your mind right now, or maybe they have crossed your mind at some point in time, then I would say that you are at the right place at the right time, because here we are trying to answer the apprehensions of all beginners, all beginning level questions. And hopefully by the end of this session, you would be having a clear understanding what securities market can do for you, and how would your approach towards securities market would make all the difference. So let's address them one by one, friends. The first question was, should you have another source of income? And the answer, I think, of all the people who are there in the meeting today, everybody would be saying that yes, we should always have, another source of income which is there at your back. You are going to, spend your life with a tension-free mind if the parallel setup of income is there in place for you. As it is very commonly said, in normal household languages, that expenses never stop, but income eventually does. Once we are reaching our retirement age, superannuation age, the age when we don't want to work any longer, if we don't want to be part of the rat race any longer, that is the point when the steady source of income which you would be getting in all your learning years would eventually stop. But the expenses won't stop at that age. You will have to, take care of your household expenses. You will have to take care of your dependents. You will have to take care of your medical needs. You will have to take care of your social responsibilities. So if you have a parallel set of income which is taking care of all these requirements, you are having a better quality of a life, a good quality of life that everybody desires these days. So your emergency funds would be in place. Your steady flow of income will keep you better prepared for any kind of emergencies you face. So you would be, leading your life with a tension free mindset, and that would, kind of be giving you a good quality of life that everybody desires. So yes, definitely we should have another source of income. Now, if the next question after this is, if I decide that yes, I want to make my second source of income by using the securities market or the stock market as my go-to platform. So the question is stock market risky, and why are people scared of it? So you can equate this to, friends, that have you thought of any other business which is totally risk free? Can you think of any other profession besides securities market which guarantees you that 100% this is safe and you will not be facing any kind of downhills or downslopes, or one of those days when you are not doing too good in your businesses? I'm sure you would not be able to think of any such name. So stock market or securities market is as risky as any other business. The thing is how to manage this risk. So in securities market, you are investing in businesses of companies. There are multiple businesses, multiple companies who are involved in different businesses. Now you are investing in businesses of those companies. When you buy stocks of those companies, it means you've become a part owner of that company. Now a company may profit or a company may face losses. It's all part and parcel of this business. It's all part and parcel of the game. Now we can avoid the risk to certain extent by carefully choosing the companies in which we choose to invest. For example, a layman investor would be asking, I don't know, there's such a plethora of companies who are listed on the exchanges. Which one should I choose? There are around 2000, 3000 companies on the stock exchanges. Now I, as a person who's not having much knowledge of the securities market, which is the right company should I choose, which gives me the bare minimum risk? So the answer here is, to avoid the risk, first of all, choose companies that whose products you are using on a daily basis, whose business you can understand from a layman's perspective. For example, we all are using toothpaste and we all are using soap in our daily day-to-day life, and this is one business which is not going to go out of a trend, out of requirement at any point of time. So the companies manufacturing such consumer durable items, such fast moving consumer goods like Unilever, or maybe you are using Britannia, you're eating biscuits, you are eating Maggie, so you can choose to invest in such companies like Britannia. Wipro is one company whose example is quoted everywhere. It's a very well published story that if somebody had invested 10,000 rupees in Wipro shares in 1980, today it was worth 700 crore rupees. Now this is one success journey, one of those companies which we use to is told to the investors to motivate them to invest. Such success journeys are there in for many other companies as well. You take the name of Infosys, you take the name of Reliance, you take the name of SBI, State Bank of India, you take the name of HDFC Bank. All these companies, their products you are using, you are having your bank account with HDFC or SBI, or maybe you are using the technological products of TCS or Wipro, and you are using oil of Wipro, that edible oil. Wipro also manufactures edible oil. You're wearing clothes of Vimal or Raymond. So Reliance is the company which is producing Vimal brand. So all the products that you are using, which are that they are not going to go out of business at any point in time, these are the companies you should invest in. Please don't trust in anybody's tips or tricks that anybody has to give you. Any kind of messages are coming, some bulk mails are getting floated on your emails. Don't trust on all these. Trust on your instincts and trust on the products that you use. If you choose certain good companies, then definitely the stock market will not remain risky for you. Another way to avoid the risk of investing in securities market is to create a portfolio. Always invest in a portfolio of stocks, say 8 to 10, 12 stocks, so that even if there is some kind of risk or some kind of downward fall in the stock prices, the others will average it out, so you will get a good portfolio return. So don't invest only in a single stock. Always create a portfolio that diversifies your risk, and that will also take away the fear that anybody has pertaining to the securities market. Now, the next question is, can you invest without any commerce knowledge? Definitely you can do, because what is required for such stock picking, for such intelligent investment, is just basic level of your skills and knowledge that any prudent individual has. You are not required to do tedious mathematical calculations, financial calculations to select a good stock. No, just a basic understanding of how the markets are working, how to pick a right stock, and that anybody can do, because we all are at the end of the day consumers of good companies and their products, and the reputation the good companies carry you are well aware about it, and that will make a big impact on your self confidence. So please don't worry, anybody can take a head start. Who has a basic skill set or a basic school level knowledge, they can take a head start in the securities market. The third question that comes to your mind after you have tackled this question in your mind, that whether the stock market is risky or whether my knowledge levels are sufficient, is how much return should I expect? So friends, here the returns that historically this securities market has given to investors when they were invested in longer duration is in the range of 12 to 18% and sometimes 20% as well. Now, when I take this name, I say the returns generated in the long duration. What do we mean by long duration? A minimum time commitment of 4 to 5 years is definitely required. And if you have that kind of time frame in your hand, and if you are willing to devote that much time, 5 years, 6 years, anything beyond 5 years, 6 years, you have the full chances of what historically the market has given return. You have full chances of getting that return. Even, friends, even nature tells us to be patient with in its own ways. If I'm sowing a mango seed today, can I expect to get a good harvest of mangoes from the baby plant next year? No, it's not possible. Nature has given us this rule that this plant will take another 6, 7, 8 years to become a big tree. And once this small baby plant grows into a big tree, it will give you a good harvest of mangoes every year. So please trust me, patience is the name of the game. If you are having a long term commitment, you are definitely going to reap a very big harvest of your returns that you can get. Next, if we say that how should you start investing in the securities market once you are convinced about the markets, about the products, about the options available to you, and about the benefit of long-term investing, and you have understood the power of compounding. Now you wish to understand how to start investing in this market. So for that, this procedure has been simplified to quite an extent. You should be having your PAN card ready. You should be having a bank account and your address proof in place. So address proof can be your Aadhaar card, a passport, your driving license, or any utility bill. If all these three basic documents are ready with you, you are ready to take a plunge in the securities market. You can, very well start investing. Now, how to select the stock broker through which you have to invest? So please understand, there are two categories of brokers in market these days. Now, a very popular category amongst the newer generation are the discount brokers. So a lot of discount brokers have come up, who are charging practically negligible brokerage. What is brokerage? Brokerage is the commission, the charge which a broker takes to provide you the services that they are giving to you. So the discount brokerages, the name as it is suggesting, discount brokerages are offering you practically negligible brokerage. So you can, you might as well start your journey with any of the discount brokers by asking getting in touch with them personally through their phones or emails, or accessing their website. You can also do it through regular stock brokers. So there are many regular stock brokers which SEBI has registered. The list is available on SEBI's website. The list of all regular and discount brokers is available on SEBI's website. You can visit SEBI's website and see the entire list. Whichever name seems more suitable to you, according to your requirements, you may choose that entity as your broker. And you can start your journey by doing your KYC procedure, which is client registration. The basic documents required is PAN, bank account, and your address proof. Once this is done, you are in touch with the broker. They will open a demat account for you, because the securities that we buy in the markets these days are in electronic form. So the depository account or a demat account will be opened with a depository participant. So all your shares, buying and selling, the inflow and outflow of shares will happen from your demat account, and inflow and outflow of money will happen from your bank account. So 3 accounts would be required, which is known as a 3-in-1 trading cum demat account, and it will be opened through any of the stockbrokers that you choose. The next question is, how much amount should I start with? Now everybody has a different, investment capacity. Everybody has a different level of amount available with them for investment. So let's see what could be the bare minimum amount with which you can start your securities market investment journey. It could be something as small as rupees 500 to rupees 1000 per month. Beyond that, the sky is the limit. After that, you can have amounts, higher amounts also, as per your savings that you do every month, as per your sources of income. But with bare minimum 500 to 1000 rupees per month, which I'm sure is affordable with the maximum people available over here. So whether you're a student or a housewife or a retiree, anybody can afford this amount. So start your journey with 500 to 1000 rupees per month. And you can keep on increasing it as and when your salary increases. Your salary, you get some kind of a bonus from your office, or you get some jump in your career graph, you get a promotion. So keep on increasing the amount as and when your income levels are increasing in your profession. Always make sure that you have to be very, very disciplined in your investments. When I've written it is 500 to 1000 rupees per month, please make sure that you are disciplined with this amount in your entire investment journey. Because if we have to accumulate a good corpus, we need to have that kind of discipline, that kind of investment hygiene in our behavior as well. Now, with this small amount, one question would be that with this small amount, what is the corpus that I can build after my long term investment? So studies have shown that in case market is giving you an average return of 15% in the long term, which is a period beyond 5 years, 7 years, if you are investing 1000 rupees every month and you are increasing it steadily year on year with the increase in your savings, your salaries, so after a period of 25 years, you would have accumulated 1 crore rupees in your account. This is considering the caveats that you are investing regularly every month, 1000 rupees every month. You are increasing your savings you're increasing your investments every year. And the market is giving you an average return of 15% annually. And your investment period is 25 years, a corpus of 1 crore can be easily accumulated. If you increase this amount, suppose instead of 1000, I'm investing 3000 rupees every month, whether it is through direct stocks or whether it is through mutual fund route, and the market is giving me a return of 15%, then after 25 years, I would be having a corpus of 2.5 crores in my account. So higher the amount you invest every period, the higher is the corpus you accumulate. But trust me, friends, this is possible only when the discipline of investments is maintained. Now, once we have understood the importance of investment, another concept we have to understand is that in case of emergencies, if I need my fund, in case of emergencies, if I need it back, then what is the exit route available to me? So you can easily sell your securities, you can easily sell mutual fund units, whatever way you have invested in the market. The market, working has been designed in such a way that within 24 to 48 hours of your selling your shares or mutual funds through your broker, you get the money back in your bank account. So please be worry free from this particular point that your money would get locked up. No, if you have chosen good companies whose shares are liquid and you want to sell them in emergency, the money will come back to you in your account within 24 to 48 hours of your selling your investments. So that part, that comfort level is always here once we are there in the securities market. So next question could be that, okay, all my basic questions are answered today. But what if I want to know more about the securities market? Today, my apprehensions have been addressed, but I want to understand the structure of the securities market, what all are the products available for me for investments. Let me understand the nitty-gritties of those products. And I want to, take a very informed and a very knowledgeable plunge into the market. So what could be my base from where I can build up my strong building of knowledge I can have, so that my investment journey is very fruitful. So for that, I would suggest that NISM is having multiple courses designed for your specific learning requirements. Each individual has a different requirement. Each individual wants to be an expert in a different domain. Somebody wants to learn about primary market. Somebody wants to be an IPO expert. Somebody wants to be a secondary market expert. Somebody wants to be a derivative specialist. Somebody wants to distribute mutual funds. So these are the different areas in which securities market is working, and you want to have your understanding of that particular segment in detail. So you can browse NISM's website for multiple courses, which I will also be showing to you in the further slides. But those of you who want to have the basics of securities market in place, this module, which we call NISM Series 12, Securities Markets Foundation Certification Examination, this is your go-to study material and exam. So NISM is giving this module in a very easy to understand language to all the beginners who want to make their careers or who want to put their investments in securities market. So this exam is an entry level examination for persons who are entering or acquiring some who want to acquire some kind of knowledge for Indian securities market. The structure of the exam is such that it is a, computer based examination with the MCQ format of question paper coming in front of you. The test duration is for 2 hours. So if you choose to appear for this examination, you will have to register yourself on NISM's website. You'll have to go on the certifications portal of NISM. There you will register yourself, and then you will enroll yourself for Series 12 Securities Market Foundation examination. You will get the study material to do all your preparations. So please don't worry, all that has been taken care of. Then whenever you are ready with your preparation, you can enroll by taking up a date, taking up a slot on an examination center, which is, the list is available on NISM's website. So you can select the most suitable examination location for you. So you go there on the examination date that you have selected. The test duration is of 2 hours. There are 100 questions of 1 mark each. There is no negative marking. So a suggestion is that please attempt all the questions to the best of your knowledge. The certificate validity is of 3 years, and you get this certificate if you have got a passing score of 60%. So that makes the certification process very, easy, comfortable. You can easily study at the at the comfort of your houses, or at the comfort of your schools or colleges, and appear for the exam as per the date that you have taken. And this exam will make a sound foundation. It will create a sound base for your securities market journey. So I would suggest all the stock market enthusiasts who want to enter this market to please go ahead and take up this course called Series 12 Securities Market Foundation Examination. We suggest all professionals who wish to make careers in the securities market, or you are at entry level professional in the securities market, you've already joined them, you are employees of intermediaries who are working in this market, or you are a professional of some other industry, or you are an expert of some other domain area, you are a homemaker, you are a teacher, you are a student, this exam pertains to yourself. Now let me brief you about the content of this module. So it is broadly divided into 6 chapters and clubbed under 4 headings. So the first part is the basic of Indian securities market, where you will understand the structure of Indian securities market. You will know what are the various processes involved in primary and secondary market. You will have the basic understanding of the schemes and products in mutual funds, derivatives. It will tell you the role of securities market in long-term wealth creation. It teaches you the technological advances which has come into securities market domain over the last decade or so. It will give you a idea about what is the difference between equity market instruments and debt market instruments, and then how to choose equity or debt as per your financial goals, as per your monetary requirement. So that's covered in the basics of Indian securities market. The second chapter talks about, second and the third chapter, they talk about primary market and secondary market. So primary market, as you know, very popularly, we call it as an IPO market. So what is an IPO and what else is there in primary market besides IPO? Primary market is not only limited only to IPO. There are many other instruments also, like a FPO or a private placement or a rights issue or a bonus issue. So what are all these instruments? A very easy to understand description of all the primary markets instruments is given there. Then what is the difference between primary market and secondary market? What are the intermediaries that are working in primary market? So you would have heard names like a merchant banker, a registrar, or a transfer agent, a custodian, a depository, a banking syndicate banker, or maybe a credit rating agency. All these names we are explaining as they are the intermediaries of primary markets. Then secondary markets, we talk about what is the importance and how primary and secondary markets are interlinked. So we'll be talking about their interdependence, and also we'll be talking about their differences, that what is the basic difference between having these two markets in place under the securities market. Then we'll be talking about how trades are executed in secondary market, because secondary market is that popular share market that this secondary market is one thing that is working on the stock exchanges. So when you take the name of stock exchanges, NSE, BSE, what is majorly happening there and what everybody knows as the share market is actually the secondary market. So we'll learn how the trade execution process happens, how a client is getting registered, then what are the risk management factors to be kept in mind, what is margins, in what different ways margins are collected, and what if I have a grievance or a problem while working in the securities market. So who is going to address those grievances? Who is going to take care of my complaints is that I may be having? All this is explained very much in detail in the various processes of primary market and secondary market. Then we also talk about mutual funds and derivatives in this module. Now we all know, friends, that if we are little reluctant in participating in directly buying or selling equity shares in the market, we feel that we need somebody's assistance, somebody's help. So mutual funds is that domain, is that branch of the securities market where indirectly you are investing in the same securities market, but with the help of a third party whom we call a mutual fund company, AMC. And there are experts who are who are handling your money on your behalf. They are investing as per your requirements, as per your goals that you may be having, and they are investing your money because they are highly qualified, experienced persons. They are devoting time for your investments, so you would be paying them some charges, some commissions in exchange of their expertise which they give to you. So in the chapter that we are talking about mutual funds in details, we are talking about what are the different types of mutual funds. First, we'll explain you the concept of mutual funds, and then what are the different types of mutual funds, because SEBI has made several categories of mutual funds. So we'll be trying to understand what are those different categories. I'm sure you all have heard these names called open-ended mutual funds or closed-ended mutual funds, or an active fund or a passive fund, exchange traded fund or index fund. So what are all these? That is clearly explained in this chapter of mutual funds. We also tell you about different kind of systematic investment approaches that you may follow here, which is a very popular term called SIP, systematic investment plan. So that everybody has heard. So we'll be discussing what actually is an SIP and how an SIP works for my benefit, for creating wealth for myself. Also, in addition to that, there are other systematic plans as well, which are SWP and STPs, various kind of switches. SWP is a systematic withdrawal plan. STP is systematic transfer plan. So we'll be explaining how these can be used in combinations, or how they can be used, in a seclusion also, for creating long-term wealth. Also, here also we'll be seeing what are the various investor service standards that mutual funds are following. So what are the kind of timelines that you have to follow? How are you getting to know the value of your investment? So that's known as NAV. I'm sure everybody has heard this term, NAV, net asset value. So we'll be discussing how NAVs are being arrived at, and how the various intermediaries are following the timeline so that you get the best NAV according to the time at which the action was taken. The next concept in this, we would be talking about derivatives now, which is a much talked about product in investment markets these days, in securities market these days. So this instrument is available for investors to hedge their portfolios. This is a risk management tool which investors who are invested in cash market or equity market for long term, they can use derivatives as a hedging instrument, as a risk management tool, so that in times of adversities, when the market is volatile, it is fluctuating, there is one instrument you can go to hedge your portfolio, to minimize your risk, to remove that fear of investments, which is derivatives. So we'll be talking about what are the basic type of derivative products that are getting traded in Indian markets, like futures and options, and what are different types of options. We'll be also talking about their trading and settlement process. So as in how derivatives trade, what are the timelines they follow, what are the different trading terminologies that are being used, what are different market indicators that derivatives are using. So we'll be talking about all these, in detail in this fourth module. So you see, friends, when I've explained you what all you are, targeting to learn if you have enrolled yourself for Securities Market Foundation Series 12 exam. So you see here that all the things that a layman wants to get answered, all the question that that any beginner would want to get answered before they start their journey in securities market, is being taken care of in this particular module, which is Series 12 Securities Market Foundation. Now, besides this, this basic module, NISM also has some Securities Market Foundation or basic certification common for all. So there are different modules that are catering to specific requirements of individuals according to their area of businesses, area of works. So we've mentioned some popular certifications which people should do as per their profile. So if you are into product sales, if you are into hardcore marketing and selling of securities market products, so you could opt for currency derivatives module, interest rate derivatives module, or equity derivatives, or common derivatives, commodity derivative module. This is specifically for hardcore salespeople or people who are exactly doing buying and selling on behalf of clients. Now, for mutual funds, or for people involved in portfolio management services or alternative investment funds, the modules applicable are mutual fund distributors or foundation, alternative investment fund category 1 and 2, their distributors module is there, PMS distributors and portfolio managers module is there for people pertaining to this area of operations. Then comes in advisory modules. Now, if you want to work as an advisor in the market, securities market advisor, you want to advise others on their investment journey, you want to advise others on the products, then investment advisors level 1 and level 2 is that module. You can also opt for research analysts, people who are with an academic bent of mind and they want to select right stocks. You can go ahead with the research analyst module. If we want to be retirement advisors, as is mandated by PFRDA, this module is something that you should opt for. For operations, you have RTA, corporate RTA. RTA means registrar and transfer agents. So for that, you have a RTA corporate or a RTA MF module. For depository operations, for how to operate DMAT account at the depository participant level, depository operations is the module that you should look forward to. If some person is working with a broking or a company or a authorized person, then you are involved in day-to-day operations of a intermediary, which is the stock broking company. So SORM, which is Securities Operations and Risk Management, is the module for you. And if you are a primary market intermediary working as a merchant banker, so the merchant banking operations module is something that you should look forward to. For people with legal backgrounds, for people who are into compliance and audit, for them, we have special modules called Securities Intermediaries Compliance, Non-Fund Activities and Taxation in Securities Market, as well as Social Auditors. So all these modules are available. The details are available on NISM's website. Whichever area seems appealing to you, whichever area you are already working in, and you want to acquire more knowledge, these are the examinations you may select them from. And once we are certified by NISM, once we have that solid knowledge base, whether I want to invest in the market or whether I want to work in any area that is available for me in the securities market, these will give you a strong head start. This will create a strong knowledge base for all of you. And then there would be nothing stopping you to progress further, to prosper in the securities market. This will take away all fears that anybody would be having pertaining to securities market. So with this, I would want to end the brief session that we had planned for all the beginners today. Now we are open for Q&A session, and I would request the moderators to please take on the questions so that we can handle them one by one. We are open for all kind of queries from the participants.
Thank you so much, ma'am. So we'll see what are the questions.
Yes.
Ma'am, as you've already explained that a candidate can start with the minimum amount investment with the minimum amount of rupee 500. But
Yes.
Still there is a question from a candidate that how much capital is required to start trading.
Okay, so I think this question is from Abhishek Maurya. I saw that.
Yes, ma'am. True.
Yes, so Abhishek, we have already spoken about it at length, but still, see, bare minimum, you can start with 500 rupees to 1000 rupees. That's the minimum with which you can start your investment journey. And beyond that, it depends totally on what kind of money is there at your exposure. Sky is limit after that. But bare minimum 500 to 1000 rupees, which I feel is affordable for maximum of us. So this is the amount with which you can start your trading, and you can aspire to see quite handsome returns even with this small amount of 1000 rupees. As I already explained you, that if you are really very, very patient, diligent with your investments, and in the long run the markets are giving you returns in the range of 12 to 18%. So in a time frame of 22 to 25 years, you would be having close to 1 crore rupees in your account, provided you are diligent, you are disciplined with your investments, and you have chosen the right product which gives you a good enough return.
Thank you, ma'am, for the answer. Yeah, there is another question from Mr. Tirthankar Mishra that I am doing regular profit in options, but I want to get certified from NISM and get registered to SEBI. Please say the process. So,
Mr. Tirthankar, if you are doing options, so there is equity derivatives module for you. You should clear that module. You should get yourself certified with this equity derivative module, which is NISM series 8 for futures and options, equity derivatives as in futures and options. So once you are done that, you are certified, and then you are open to take up employment also pertaining to this particular domain with any intermediary. You would also be gaining a lot of knowledge once you are going through that book, that study material which NISM provides for futures and options, which is equity derivatives. Also, there is one more module called common derivative module, where besides equity derivative, you can also learn about commodity derivative and currency derivative. So if you have a wider horizon, you can choose to get yourself certified in the common derivatives.
Okay, thank you, ma'am. Some candidates are having questions like we are preparing for a particular examination, then whether this particular discussion will be helpful for them or not. So I think so for them, the answer could be like they can prepare from the module which has been provided to them at the time of enrollment.
Yeah, for all such candidates, I would like to say that in this session today, we have highlighted the importance of investments. We have highlighted why you should, start your securities market journey, and the module that we discussed in detail today, the Securities Market Foundation. This creates a base for all your other modules. So even if you are appearing for other modules, I'm sure once you are registering yourself for equity derivative or currency or commodity, you are getting their study material and you're preparing from that exclusively. But this particular Securities Market Foundation module is giving you a hands-on experience from all the different domains in which the securities market work. So this gives you a sound understanding, a knowledge base is formed for all aspects of trading. So you can have your beginners level done, and then you can specialize in whatever module you desire to have further your knowledge.
Thank you, ma'am. There is another question from Mr. Sandeep regarding that. Does NISM is taking classes for the certification courses or just provide the material?
Okay, so Sandeep, these are self-study modules. These are self-study modules wherein if you register, you will get a booklet in soft copy from NISM. So they are very easily explained self-study modules. You can go through them and you can appear for the exam as per the date that you have taken. No such formal training classes are being done for these modules. They are, as I already told you, they are self-study modules, and you can prepare them at your own, pace.
Thank you, ma'am. So we can conclude the session with this particular aspect. So I would like to thank you, ma'am, for briefing candidates about what is the importance of knowing one's risk quotient and what are the KYC requirement to start your journey in the investing stream, and learning about basic aspects regarding that. What is the importance of having investment discipline? What could be the important certification which may help them understanding the areas of various areas where they can start their journey in the stream of investment. So thank you so much, ma'am.
Thank you, Kiranjit. Thank you, NISM, for this wonderful opportunity. And I look forward to speaking to the participants at a later occasion as well. Thank you so much.
Okay. Thank you, ma'am.
Good evening, and a very pleasant evening to all the participants also. It was nice having all of you in the session today. Thank you so much.
Thank you, everyone. Yes.